pause for a second, stop scrolling, because what I am about to tell you could completely change how you use your next $10,000. I'm not talking theory, I'm not talking old school advice, and I'm definitely not talking about what your bank wants you to do. This is breaking right now behind the scenes, and most people in the US won't realize it until it's too late. If you have $10,000 sitting in your account in 2026, the way you invest it from this moment forward can either protect you from what's coming or quietly destroy your buying power over the next few years. And the scary part is the safe moves everyone is making right now are exactly where smart money is starting to exit. Before we go any further, if you care about your money, your future, and staying ahead instead of reacting late, make sure you like this video and subscribe to the channel. This is Investonomics, and on this channel we break down what's really happening in money, markets, and power moves in a way that actually makes sense. Subscribing right now helps you stay ahead of the next shift instead of hearing about it after the damage is done. Now let's get into it. Imagine this scenario. You wake up tomorrow, check your bank balance, and that $10,000 looks exactly the same as it did yesterday. Same number, same digits. But in reality, it's worth less than it was last year, and it'll be worth even less next year. That's the invisible tax nobody warns you about. Inflation isn't just higher grocery bills or expensive rent. It's a silent leak draining cash that's not working. And here's the insider truth most people miss. In periods like this, doing nothing is actually the riskiest move of all. Right now in the US, we're in a strange moment. On the surface, things look stable. The stock market isn't crashing dramatically. Headlines say inflation is cooling. Interest rates are high enough to make savings accounts feel attractive again. And because of that, millions of people are parking their money and telling themselves they're being smart. But behind closed doors, big funds, institutional investors, and corporate insiders are quietly repositioning. They're not asking, will the economy be fine? They're asking, where does money go next? If you have $10,000, your goal isn't to get rich overnight. Your goal is survival first, then smart growth. You want to protect purchasing power, stay liquid enough to move fast, and still be positioned where upside exists if forecasts play out. And yes, there are forecasts that most retail investors never hear until months later. Here's the first hard truth. Putting all $10,000 into a savings account, even a high-yield one, feels safe, but it's not a real investment strategy anymore. Even at 4 or 5%, you're barely keeping up. And after taxes, you're often losing ground. Smart money uses cash as a weapon, not a parking lot. That means some cash stays liquid, but not all of it sits idle. The smartest approach right now is not all in on one thing. It's strategic allocation. Think of your $10,000 as a small team, not a single soldier. Each dollar has a job, and together they cover defense, growth, and opportunity. Let's start with the foundation. A portion of your money needs to be boring on purpose. This is where most people either overdo it or completely ignore it. Keeping around 30 to 35% of your $10,000 in low-risk liquid instruments makes sense right now. Treasury bills, money market funds, or short-term government-backed options. Not because they'll make you rich, but because they give you flexibility. Insiders value flexibility more than hype. When markets move fast, the people with dry powder win. This part of your money is your shield. But here's where it gets interesting. The next chunk is where long-term wealth is quietly built while most people argue on social media. Right now, US equities are in a selective opportunity phase. That means not everything is cheap, but not everything is overpriced either. Broad market exposure still matters, but the way you get it matters even more. Instead of chasing hot stocks, smart investors are spreading exposure through diversified index-based strategies, especially those tilted toward companies with real cash flow, pricing power, and global reach. These are businesses that can raise prices without losing customers. In an inflation-aware world, that's power. Allocating around 30 to 40% of your $10,000 here positions you for long-term growth without betting your future on one headline. This is where patience pays, but only if you understand that volatility is part of the deal. The market doesn't move in straight lines. It moves in waves designed to shake out emotional investors. The people who win are the ones who stay in while others panic. Now let me tell you something you won't hear often. One of the biggest insider conversations right now isn't about stocks or bonds. It's about real assets and alternative exposure. Not flashy speculation, but strategic hedges. When currencies lose trust, tangible and scarcity-driven assets quietly gain attention. This doesn't mean going all in on anything risky. It means controlled exposure. Allocating 10 to 15% of your $10,000 toward assets that historically protect against currency debasement can make sense. This could include commodities-related exposure or other scarcity-based instruments. The goal isn't quick profit. The goal is balance. When one part of the system wobbles, another holds steady. That's how portfolios survive uncertain decades, not just good years. Now let's talk about something most videos avoid, but Investonomics doesn't. Opportunity capital. This is the money that lets you move when everyone else is frozen. Around 10% of your 10,000 should be set aside specifically for future moves. This isn't random gambling money. This is capital waiting for a clear signal. Market corrections, sector pullbacks, sudden overreactions. These moments don't announce themselves politely. They happen fast and only people with available capital can act. Insiders don't rush, they wait. And when fear spikes, they deploy. That is why this part of your money should stay flexible and mentally untouchable until the right moment appears. Now let me address the biggest mistake people make with $10,000. They overcomplicate everything. They jump from trend to trend. One week it's tech, the next it's crypto, the next it's something they heard about from a friend. That's not investing. That's reacting. And reacting is expensive. Smart investing right now is boring on the surface and powerful underneath. It's about structure, not excitement. If you build a system that makes sense, you don't need to watch the market every minute. You don't need to panic at red days. You already know why each dollar is where it is. Another insider perspective you should understand is time horizon. $10,000 invested correctly over 10 to 15 years can quietly turn into something meaningful. But only if you don't sabotage it by chasing short-term noise. The biggest enemy of your money isn't the market. It's impatience. And this is where mindset matters. Most people ask, what's the fastest way to grow $10,000? Smart people ask, what is the safest way to make sure this 10,000 still matters in the future? Growth comes second. Survival comes first. Right now, forecasts suggest continued economic pressure, uneven growth, and more surprises. That means volatility isn't going away. But volatility isn't bad if you're prepared. It's only bad if you're overexposed, undereducated, and emotionally reactive. That's why channels like Investonomics exist. Not to hide fear, but to decode reality. To help you see patterns early, not late. If this breakdown is already helping you think differently, make sure you're subscribed, because this is just one piece of a much bigger picture. As we get closer to the end, here's the takeaway you need to remember. $10,000 is not small if you use it correctly. It's a seed. And seeds don't grow overnight, but they do grow if you plant them in the right soil. Right now, the soil is unstable, so you don't plant everything in one spot. You spread it wisely. You protect part of it. You grow part of it. You reserve part of it. That's how smart money moves in uncertain times. If you've made it this far, I want to hear from you. Drop a comment below and tell me how you would invest $10,000 right now, or what part of this strategy surprised you the most. Your comments help this channel grow and spark discussions that actually add value. And if you know someone who's sitting on cash, confused, or about to make a panic move with their money, share this video with them. One share can save someone years of regret. This is Investonomics. Stay sharp, stay patient, and remember, the goal isn't to chase money. The goal is to position yourself so money has no choice but to follow.